Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced their first quarter 2023 earnings results in the middle of April. And that stock is Johnson & Johnson. And we can see right here that this stock is down around 7% in the same time period that the S&P 500 is up 1%. So they are underperforming the market at the moment. But we're going to see in this video if this company is currently trading below intrinsic value per share, and then also look into their financial statements and some of the recent news that's come out surrounding this company. So right here in this article, they try to do a quick comparison between Johnson & Johnson and another company called Intuitive Surgical, which is a startup company. And I'm just going to focus on the Johnson & Johnson statistics here. They're pretty brief and short and to the point. To start off right here, they point out that Johnson & Johnson has kept their business stable and their dividend consistent for years. This company has been operational for more than a century, as we can see right here. And some of their popular consumer brands, which a lot of you watching this video probably use, Band-Aids, Listerine, Neutrogena, and Tylenol. So they do have pretty mainstream products. And we can see right here, they point out that even though their popular consumer brands are very well known, their pharmaceutical business is actually thriving. It contributed to 54% of the company's total revenue in their first quarter ended March 31st. And then lastly, right here, if I scroll down, Johnson & Johnson is actually a pretty popular dividend stock. They hold the title Dividend King, which is awarded to companies that have increased their dividend annually for at least 50 years. And the company recently announced a 5.3% dividend hike, making its 61st dividend increase. And it yields a 2.9% dividend yield, which is higher than the S&P 500's average yield of 1.7%. So not only are their revenues diversified across their consumer brands and their pharmaceutical products, but their dividend is consistent and it has been growing over the last 50 or so years. So pretty interesting investment here. Now I want to look into their financial statements right here. This is their balance sheet comparing January 1st, 2023 to April 2nd, 2023. We can see during that time period, total assets are up from $187 billion to $195 billion. In terms of liabilities and shareholders' equity, we can see total liabilities come out to be around $125 billion, and total shareholders' equity comes out to be around $70.8 billion. So most of their business is financed by liabilities compared to equity. And we can also see that they combine their additional paid-in capital and retained earnings line item here. It reduced from $128 billion to $124 billion from January to April. Next, on page 9, we can see their income statement comparing April 3rd, 2022 to April 2nd, 2023, so first quarters of both years. And we can see during that time period, their revenue increased by about 5.6% from $23.4 billion to $24.7 billion. But unfortunately, due to increases in their expenses, mainly right here in the other expense line item, we can see that they experienced a net loss in the first quarter of 2023 of around $68 million, which is down from their net income of $5.1 billion in the first quarter of 2022. So that's a decrease year over year of 101.3% for their bottom line net income. And lastly, right here, we can see their cash flow statement comparing April 3rd, 2022 to April 2nd, 2023, so the first quarter of both years. And we can see their operating cash flow decreased from $3.9 billion to $3.2 billion. And we can also see in their financing activities, they repurchased a lot of common stock and also paid out dividends to shareholders in the first quarter. They paid out dividends of $2.9 billion, which is up from $2.7 billion year over year. And they also repurchased $3.5 billion of common stock, which is up from $1.5 billion in 2022's first quarter. So they're prioritizing returning value back to shareholders a lot more this year than they were last year, which is definitely a good sign for shareholders. Now I want to look at this discounted cash flow model to figure out the intrinsic value per share for Johnson & Johnson. Yahoo Finance estimated that they're going to grow at around 4% compounded annually for the next 5 years. So I was conservative and I cut that value in half to 2% for the next 5 years after that. They had around $17 billion of free cash flow in their most recent full year, which is 2022. And they had a net debt position of negative $28 billion after subtracting their cash on their balance sheet, and they have 2.6 billion shares outstanding. That puts their estimated intrinsic value per share at $69 per share, which means that at the current share price, they're currently trading above their estimated intrinsic value per share. So based on these estimates from Yahoo Finance, they would not be trading at a good buying opportunity at the current share price. And so right here, I did a industry analysis comparing them to their competitors in the same healthcare industry, particularly Eli Lilly and Merck. And we can see that across the board, Johnson & Johnson has the lowest gross profit margin, but it's still pretty high at 67.67%. Eli Lilly's is the highest with 76%. They're known for selling insulin. And then we can see in net profit margin that Merck has the highest net profit margin at 24%. Johnson & Johnson has the lowest, again, at 18%. Return on assets goes to Merck at 13%. J&J is 9%. PE ratio, J&J is middle of the pack, trading at 33 times earnings. Eli Lilly has the highest at nearly 70 times earnings. And we can see in terms of dividend per share, J&J pays the highest dividend per share at $4.45 per share. So if you were going to rank these companies against each other, I would say probably dividend per share goes to J&J, but in terms of profit margins, it looks like it would be Eli Lilly for gross profit and then Merck for net profit and return on assets. And to end the video off, I wanted to compare J&J to some of the other companies we've looked at in past videos. Right here, we can see in terms of share price compared to intrinsic value to see which companies are trading at the best buying price at the moment compared to their estimated intrinsic value per share. We can see J&J did make it onto the list, but they're not trading at a good price compared to intrinsic value. They're trading at 2.35 times their estimated intrinsic value of $69 per share. So that puts them at 10th on the list. Right now we have ExxonMobil, GE, ConocoPhillips, and Google being the only 4 companies we've looked at across the last maybe 20 to 30 companies that were trading below intrinsic value per share. Albertsons used to be trading below intrinsic value per share, which was on this list, but as I touched on in the last video, they are no longer doing that, so they're not on the list. So now it's just these top 4 companies. In terms of growth rate, it looks like J&J has a growth rate of 4% for the next 5 years, so they didn't make it onto the growth rate table here. GE still holds the #1 spot at 44%. In terms of profitability ratios, we can see J&J has a 67% gross profit margin and an 18% net profit margin. That puts them on the board for both the gross profitability and the net profitability tables. They come in 5th place on the gross profitability table. Adobe still holds the #1 spot with 89%. And then they come in 9th place on the net profitability table. Microsoft holds the #1 spot there at 36%. And lastly, we can see stock performance over the last 5 years. J&J's stock performance over the last 5 years has been 30%. So not nearly good enough to make it onto the board for the stock performance chart here. Tesla still holds a #1 spot at 733% over the last 5 years. Interestingly, we can see one of J&J's competitors, Eli Lilly, is dominating on this chart. They had a stock performance over the last 5 years of 313%, way better than J&J's 30%. So based on this, I would say comparing them to the other companies we've looked at, in terms of profitability ratios, J&J is very profitable, but for stock performance, growth rate, and intrinsic value, they're not doing as good as other companies we've looked at. Comparing them to other companies in their industry, it looks like they could be doing better in terms of profitability ratios, but they're doing pretty well in terms of dividend per share and returning value back to shareholders. And then right now, as we saw from the discounted cash flow model, they're currently not trading below intrinsic value per share. So let me know in the comment section down below what you guys think of J&J and some of the recent news that's come out surrounding the company, as well as their earnings potential, as we saw in their financial statements. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.